Morning, Steve Free in Chicago with the morning grain comments. Well, Tuesday is always a day in which we have a lot of data to digest, but today is even a bigger data day because of the USDA report yesterday. The USDA basically came out and said that U.S. corn acres and yield was bigger than the trade was expecting. We traded and locked limit down. Right now, overnight, corn is down another 13 cents. Funds yesterday were sellers of 60,000 contracts of corn, and we still show them long about 30,000 contracts of corn. And the question in corn is, will these corn hold 375, and will the funds actually now go short corn given these USDA numbers? In the beans, the numbers weren't quite as bearish. They showed acres less than expected, but the same yield, and the carryout was about the same as it was last month. Beans prices are up about 4 cents overnight, and some people think that November beans are in a trading range between $8.10 and $8.90, kind of stuck with the large global supply. Lower China demand could test the lower end of that range, but maybe the lack of farmers selling and just the fact that the funds right now we estimate are short about 70,000 bean contracts, 40 meal, and short 12 oil, that maybe the funds will start covering those shorts as we get closer to the end of the year and we test that 890 level. Wheat's kind of a nothing market. It's following corn. Wheat world stocks are still adequate for demand. USDA raised the U.S. wheat crop a little bit, and the carryout at billion bushels is kind of a negative price scenario, keeping wheat in a trading range and following mostly the corn market. A lot of unknowns yesterday when the FSA came out and said that U.S. corn planted acres were going to be 85.8 versus NASA's numbers of 90. That's within 5% range, and it's pretty close to what we've seen as far as historical averages since 2011. Some people think that producers may have counted twice acres that were in the prevent plant for corn, and also acres that they said they actually planted the corn. USDA did allow them to plant corn on prevent plant acres as a cover crop. Total acres in prevent plant, 19.3. We had 2.2 in wheat, 4.4 in beans, and 11.2 in corn. As far as the corn crop conditions, they stayed the same, although we did see some declines in the upper Midwest. Illinois is 40, Indiana's 33, Iowa still at 66, and the Minnesota corn crop is 56 versus 57. Your increases were in the Southwest, Missouri's 39 versus 34, and Nebraska's 75 versus 71. So again, they only used satellite imagery data on this August report for yields. It's still the first time they've ever done it. They will take objective yields in September, and some people think the final yield might be closer to 166 than the 169 they said. But still, the carryout at 2 billion bushels is going to be possibly negative to price, especially if we lose export demand to South America. In the beans, they said that the planted acres for the FSA was 74.0. USDA said 76.7, that's within 96.5%, in line with the historical numbers. It's interesting, since 2011, every year the final USDA NAS soybean acres has been above what they said as far as FSA in August. So we probably think those yields are going up. Most people think the yield is probably a bushel less than what the USDA is saying, and we'll see how they take the objective yield data. We had drops in ratings in Indiana, Illinois, Wisconsin, Iowa, Minnesota, South Dakota, and North Dakota, but they went up in Nebraska, Kansas, Arkansas, Tennessee, and Louisiana. So the South got better, and the North dropped a little bit in the bean yields. And beans are still going to be made in the next 30 days because, number one, they're late, and we've got about a small percentage crop setting pods, and that the next 30 days is going to be kind of critical. We would say that the Midwest weather models are, again, maybe a touch wetter, especially for the South, with close to average rainfall over the next 10 days. 11 to 16 day outlook for the Midwest. the models are different. The American model has above average temps and below average precip, while the European model has below average temps and average to below precip. Not really the best forecast to finish this corn and soybean crop. And then next thing we'll have to watch as we get closer to September 1st, when they're predicting the first frost freeze. So we've got corn down about 13 following yesterday's limit down move. We've got beans up about 4 cents, and wheat's right now trading about 3 cents lower. So I think we're looking at corn and wheat prices maybe under pressure in the short run, and soybeans in a trading range. I think that everyone agrees in the commodity grain market that we need a trade deal with China to have them come in and buy demand to put a bottom in this market. Without that, we probably will trend lower. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.